Hi everyone and welcome back to another Brooks Price Action Weekend Market Update. My name's Tim Fairweather and today we're going to be talking about the FTSE 100. This coming week is going to be contract switchover. The contract switch is going to be on the 20th of March, which is a Thursday. So as we get closer to the contract switch, we'll be switching to the ZM 2025 from the ZH. Be sure to check the volume to see which contract's price action is the clearest. All right, well, let's take a look at the monthly chart. So we're still in this bull channel. We broke above the high with consecutive bull bars closing on their highs. You can see we had a small gap on the open of that bar. For the bulls, we're not really breaking above the bull channel. All right, we're kind of around that channel line, but we are breaking above this trading range. We've been talking about this for a while now. If this is a spike, this is a pullback to the start of that spike. The projected target is just over 9,000, 9,078. Some traders might even use the very low of that pullback. That's still going to give you a target around 9,000. I think 9,000 is a good round number for that target. That's certainly where my target is at the moment. But you can see we've had channel sideways, up, sideways, up, sideways, up. What do you think is going to come next? Well, probably sideways. If it was to do something different, that means the nature of this market has changed. Because this is a tight trading range coming after many legs up, there's a chance it's going to act as a final flag. Final flag means that we break out of it and we come back to it and it acts as a magnet. And this might be the trading range for the foreseeable future. So the bears want it to be something like that, pulling back to the moving average. At the moment, we've still got 2 weeks left in the month. These are consecutive bull bars. I certainly don't want to sell below the low of that bar. It was a buy below. It's a bull micro channel. Traders that are buying up here need to stop probably at the low of that bear bar. And you can see they're also going for about 9,000. This is a strong follow through bar. 1-to-1 is 9,100 and buying above that would take you to 9,159. This bar hasn't closed yet and bulls want a good entry bar. Otherwise, traders who bought above this bar and this bar might exit on the next bar. But their stop is down here at the moving average, and I suspect a lot of longer term traders will be looking to buy and buy lower, betting that we're not going to crash through this tight trading range. So we're always in long on the monthly. Let's have a look at the weekly chart. So we were going through this trading range for quite a while. The reports weren't super exciting, but a lot of trading is not super exciting. We're in a trading range, but the overall context is bullish. Therefore, you're looking for reasons to buy pullbacks. There was a variety of wedge pullbacks through this price action. Basically just looking for reasons to buy below bull bars and scale in, betting we're going to get the upside breakout. Here's the new breakout to an all-time high. This is a close above that range. Therefore, for some traders, it's going to be a buy the close bar. And you can see we reached 1-to-1 of that target there. So we got 1-to-1. We reversed down from that target. Now, some of those traders look for more than 1-to-1. They want their swing target. They're expecting this whole range to break out and go much higher, which was that 9,000. You can see 9,000 flat is that target. We haven't reached their target, and they think, well, there's no reason for me to get out. Here's a bear bar. It's probably going to fail. Now, it gets follow through and tests their entry. Now, that's a really good sign for a trade that's going to continue to its target. Next week's important. These bulls don't want to close back down to their entry. Otherwise, they're probably going to exit that trade. They don't want to close back in this range. Otherwise, this whole range down here, I'm drawing it roughly, will become the trading range. And that's how a head and shoulders top forms. We break out, we go sideways, we get a new high, back to more sideways, one more attempt, reverse. This is a bear bar, but it's closing above its midpoint. So some computers will just see it as a bull bar. It's not a good sell the close bar. It didn't even close below the low of this bear bar. Now, if a bear was to sell under there, if I was short under that bar and I got that bar, I'm going to exit there. That is not the kind of entry I want. It looks like everyone scalped out at exactly 1-to-1 target. I don't trade like that counter trend. I think a much better way to trade is to do the exact opposite. Where's their one-to-one target? Well, their target is at the breakout point of the range we just left. That is a fantastic buy. It's at the moving average. It's at a breakout point. It's an absolutely tremendous area to buy. So I think these traders are going to make money long. So if they're long there, they're going to stay long. That's a great entry bar. I'm betting we're going to go above there. Where's their target? Target's a new high. Target is definitely above a bear bar. What can you do if you're flat here? Could you hit buy the close? Now, well, I think it's a little bit sideways for me to just be buying the close up there. I prefer to see the market go above this bear bar and not produce another sell signal. And then the target will be for the high of that bear bar. If you're a bear, can you see it as a wedge? One reversal, two reversal, three. Maybe a parabolic wedge, and you're expecting two legs sideways to down, in which case your two legs are going to look like that, or some variant, expecting this breakout point to hold. Traders looking for a high two and then for the buyout. Now, I think that buy situation is a little bit better. So I'm not in a rush to buy that. I wasn't long on the weekly chart at that moving average. So you've got buyers here and you've got buyers there, and you've probably got sellers sitting somewhere up here on the weekly chart. All right, so let's have a look at the daily chart to see what that means for traders. And so you can see this wedge formed in a much better way. We had a proper wedge. We broke a trend line. That's good. We got the moving average gap bar and the test. Then we went all the way back up to test the high. So it's a higher high double top and then strong spike down. So that's a better structure for reversal on the daily chart. You can see bears have got a new low. What do they need? Well, they need a lower high, just like we said. We need the head and shoulders top. What can you do here as a bear? Well, you took out that swing point. If we take the highest close, the low of that last leg was a measured move down, and that was successful. We've also come back to test that. So bulls buy lower, get out. So this could be the swing sell for bears looking for 8,200. Bears probably want that whole leg, which is 8,300. And you can see that's back in the range. That's what they want to do. They want to get a swing target, gets them all the way back into that range. Why don't I like that short at the moment? Well, you're in a bull environment. What usually happens in a bull trend after you take out one of these swing points? Well, it doesn't transition into a bear trend. It transitions into a broad bull channel. Where's the low? Maybe somewhere like this. This was a flag that we broke out of. This is a new spike and a pullback. And that means that's the spike, and that's the lowest point of the pullback. That's the start of the channel. If I draw a line up to the high, this is the potential trading range, and we're right in the middle. I think this is a little bit more accurate. I don't think it's very bearish. I also don't think it's very bullish. I think if we go below this bull bar, traders will buy, betting that we're going to need a right shoulder. And this is forcing bears to sell at the moving average, but it's a bull bar. So I think both bulls and bears are going to be able to trade in here and make money. And so I want to make sure I'm not too hasty to use stop entries. So we're in a trading range on the daily chart. I don't think we're in a bear trend. We have got a strong bear spike, and this probably needs a second leg sideways to down. It could be from here. It could be from here. It doesn't have to be the same size, but I think there's going to be some sideways as well. So even though it's not the best sell in the world, this sell did trigger. And so I think if we go above this bear bar, we're also going to find sellers. And that's going to bring us back to their midpoint. I don't think bears are going to lose here. And I think as long as bulls scale in, they won't lose either. How can both sides be right? Because we go sideways. And that is FTSE for next week.